Hey guys, welcome to another video on my YouTube channel, and today in this video we are going to see a new Bank Nifty selling strategy for 2024. We are closing this year and we are starting a new year. Today I'm going to show you how you can build the strategy. We are going to backtest this, and later I'm also going to show you how you can automate it totally for free using Fintarget. And also there are a couple of updates regarding Fintarget. We have added two new brokers, that is Finvasia and Flattrade. So you can start using both Finvasia and Flattrade on Fintarget for free. Apart from that, we also have one more update. We have also included mid-cap Nifty from this week. So you can also automate your strategies in mid-cap Nifty using Fintarget. And before moving on to the strategy, there is one very important thing to tell you, that more than 60% of the Fintarget users use Firstock to run their strategies, because you can use Fintarget absolutely for free going forward also with Firstock. So you can create an account using the link in the description below and get 100 orders or brokerage credit worth 2000 rupees absolutely free. So in case if you haven't checked it out, click on the link and open your free account today. So now before moving on to the Bank Nifty strategy, I would also like to touch upon the Nifty strategy which we had previously discussed. So we had discussed one Nifty buying strategy and one Nifty selling strategy. So when we take a look at the Nifty selling strategy performance, the previous 2 months have been average. So even though they are actually making profit, the overall returns has been slightly lower. So whereas when we take a look at the buying strategy, so you can see that in the month of November we had a small loss, but in December we were able to make up the loss and also go to net profit. So both the strategies all in all are giving small profits, if not very big. And also one thing to note is both of them have been backtested on 10 lots, right? So given this, we are also going to see one more Bank Nifty strategy today, where we are going to see how we can combine it with our Nifty strategy and improve our overall system. One more thing, what I want you to do is keep the buying strategy away, because whenever we are actually taking a look at building selling systems, we want all the strategies to go hand in hand. So we want all the selling strategies to go hand in hand. That's the reason we'll keep the buying away. So we'll try to see how we can add our Bank Nifty system along with the Nifty system and make a overall better strategy. So moving forward, I will make one more video where we can combine FinNifty, Bank Nifty and Nifty and overall create a very good system. So this strategy can be used individually, where you are going to use it on Bank Nifty alone, or you can also combine it with the Nifty strategy and use both of them together. So now let us see, based on the data, how Bank Nifty has moved, how we can use particular features to improvise our performance, build the system and automate it using Fintarget. So now we'll be quickly moving on to the screen recording. So before that, don't forget to hit the like button and subscribe to my channel. Thank you. So today in this video, we'll be building a very simple Bank Nifty system after going through and analyzing Bank Nifty data. First, we are going to take 15 minutes data for last 2 years, starting from December 2021. So we are going to try to analyze the price movement, and later based on that we are going to design a simple system. So here when you take a look at the data set, so totally we have closer to around 12,439 data set. So totally that is the amount of 15-minute interval we have had in the last 2 years. So here we have two important data points which I have already made a note of, so we can quickly start working based on that. The first and the foremost data point is that the average difference between high and low of any 15-minute candle is almost close to around 100 rupees. To be precise, it is 99.13. Apart from that, we also have the second data point, that is standard deviation. So we get to know that there is a 66% chance that the difference between opening and the closing price for a 15-minute candle will be within 70 rupees. So this is a standard deviation between open and close. So if this is the candle, there is a 66% chance that the difference between the open and the close price right over here, the open and the close price is going to be within 70 rupees. So what we get to see here is, on an average, the difference between high and low of the candle is 100 rupees. So this is on an average, and also there is a 66% chance that the candle or a 15-minute candle is actually going to close within a 70-point range. So if this is clear, we can actually start building a system such that our stop losses are not going to get triggered so easily, right? So now when we take a look at the third and the fourth data point, so we get to see here that the smallest range, that means in any 15-minute candle, the smallest range between high and low was actually just 14 rupees. And the highest one was almost around 990 rupees. So that means just imagine the 15-minute high and the low difference is almost around 990. But what is more important for us is this data point where we know that on an average, the difference between high and the low of the candle is almost around 100 rupees. So right now, I have actually come to an expiry day just to look at the option delta. So now since we know that the difference on an average can be 100 rupees, let us try to make sure that we pick an option such that the movement of the option should not be more than 10 rupees. It means we have to look for an option trading with a delta of zero point 0.1. Why? If the difference on an average is 100 rupees, that means if the option is having a delta of zero point 0.1, then it is not going to move more than 10 rupees. So in that case, this option is going to move somewhere closer to around 10 rupees. And that's the reason we are going to pick options trading with delta of closer to around 0.1. So right now I have put an expiry day right over here. And when we take a look at it, you can see that the options which are trading closer to around 25 rupees. So in the call side, you can see this 21 rupee option is having a delta of 0.1, and on the put side you can see this 25 rupee or 20 rupee option having a delta of 0.1. So now let us go to 1 DTE or 1 days to expiry, and again there we find that options trading with around delta of 0.1 is mostly trading around 25 rupees. So you can see right over here. So on an average, options always with a delta of 0.1, maybe on the day of expiry or 1 day before expiry, will be trading closer to around 25 rupees. And that's the reason we are going to use the closest to premium option where we are going to put 25 rupees. Let's start building our system on Fintarget. So go to fintarget.in, you can create a free account and click on create new. So what we are going to do here is we are now going to sell call and put option trading around 25 rupees. So we already know the reason for choosing 25 rupees. So we are going to pick both call and put option trading around 25 rupees. Now we also know for a fact that in case if we keep a 10-point stop loss, on an average, since the movement is almost around 100 rupees, on an average, this can end up being triggered quite easily. So what we are going to do is we are going to place a stop loss. Instead of 10 rupees, we are going to place a stop loss at 15 rupees, just so that our chances of stop loss not being hit is going to increase. So this is going to make sure that there's a higher chance of stop loss not being hit. So what I'm going to do right over here is add a stop loss, and I'm going to add 15-point stop loss for both call and put. And finally, as you know, to increase the risk to reward, I have also discussed this in the previous system videos that we usually keep a trailing stop loss so that it is going to increase our risk to reward, because if the market starts moving in one direction, our stop loss will also start trailing. So that's the reason I always prefer keeping a trailing stop loss. We will go with a trailing stop loss of 1:1. So you can see that we have built a very simple system where we have shorted Bank Nifty call option, Bank Nifty put option, trading around 25 rupees. We have placed a 15-point stop loss and also kept a trailing stop loss. So this is a very simple system to build. No complications, nothing much to break our head. So what we are also going to do, like our Nifty trade, we are also going to execute this on 2 days to expiry, 1 day to expiry, and on the expiry day. So that would be Monday, Tuesday, and Wednesday. So 2 days, 1 day, and on Wednesday. And similar to our Nifty strategy, we are going to start this at 10:39 a.m. So why exactly 10:39 a.m.? I had already discussed this with Nifty strategy One, we want the market to completely settle down. So in case of there is any first hour movement, we can totally ignore the first hour movement and start trading later on. So there is no hurry. And also the second thing is we are not starting at common times like 10 o'clock, 10:30, 11 o'clock. So that is when most of the systems usually get triggered. So what we can do is we can start it at a very odd time like 10:39, where not a lot of systems are triggered. And just to make things much simpler for you, I am also going to share this strategy. So I have copied this link right over here, and I am going to share this link with you, and I will attach it in the description. So if you click on this link, the strategy is going to get created automatically on your Fintarget account. Previously, we only had three brokers, that is Firstock, Zerodha, and Angel One. But right now, you can also trade free of cost using your Finvasia account or Flat Trade account. So in case if you have any of those accounts, you can definitely come to Fintarget and check it out. And also, most importantly, we have also introduced mid cap Nifty on Fintarget, which you can again check it out. Now we will go into back testing this strategy and see how we can complement this strategy with our initial Nifty trade. I have added the same thing in Stockmock. So I have also attached the Stockmock link in the description. So in case if you open an account using that link, you will be getting free 20 credits which you can use to backtest. Now we'll be backtesting for the period of 1 year and see how this system has performed. So let me start the backtest, and here we are going to change the days to execution to 2 days to expiry, 1 day to expiry, and 0 days to expiry. So when you look at the strategy alone, the strategy comes with an expectancy of almost around 0.91 or even closer to 1. You can see that it has given an overall return of 17% with a max drawdown of just around 0.6%. So this strategy as it is quite good. And when we scroll down, you can see that almost all the months from last December to this December, this strategy has been profitable. So you can also see how exactly the strategy has performed day wise. So when we take a look at the chart, we also can get to know that the probability of win days is much higher. So we can see that right over here, it's around 76% compared to 24% when we are going to lose. And you can also see the risk to reward. The risk to reward is almost close to 1 is to 1.6. Right now, what I'm going to do is I'm going to add the Bank Nifty system along with our previous Nifty system. One more thing what we can do is we can delete the 1139 system, because so last time we had added the Nifty system just to show you how adding different systems which are not correlated is going to increase our performance. Now I have deleted Nifty because we are adding Bank Nifty. Now, in a broader sense, when you take two Nifty systems, they will always be more correlated because Nifty movement is going to affect both the systems. But when you take a look at one Bank Nifty system and one Nifty system, they will not be very closely correlated, or they won't have the same correlation as two Nifty systems. So that's the reason this will work out much better for us than having two Nifty systems. And when we actually come down and take a look at how exactly this system has performed in the previous year, so you can see that the probability, the overall risk to reward, and expectancy, and even the max drawdown suddenly changes. So when I calculate the margin required, you can see that we have achieved almost around 22% return with a drawdown of just around 0.36. And again, when you come down, you can see that almost all the months this system has given us a profit. And when you come down further, you can see how exactly the system has performed on every single day. And also, what is more important is you can see the consistency in the overall equity curve. So you have not seen any big drawdown at any point in time, and there's a consistent growth in our equity curve. So what I'll be doing right now is we have both the Nifty system and the Bank Nifty system added. So I will share this link right with you in the description. So I'll create a link for Bank Nifty system and Nifty system, and I'll share both the links down in the description below. So you can just click on this link and the strategy will be created for you. You can log into Fintarget and start using it. So one more important thing is that we have discussed in detail about the Nifty system in our previous video. So in case if you haven't checked that out, so I would urge you to check that out also on how we built the Nifty system. I hope this video was useful and you're also going to start automating right from tomorrow. So make sure you check out fintarget.in where you can automate your strategies. Make sure you also open an account with Firstock so you get 2000 rupees brokerage credit, and you can also use Fintarget for free. And finally, don't forget to hit the like button, share this video and subscribe to my channel. Thank you so much for joining.